Hello everyone. Today we'll analyze a major scenario that could impact the entire market. Imagine a single narrow strait through which up to 20% of the world's oil flows. Then quite unexpectedly, we see war, threats, attacks on tankers, and a near total halt to shipping. This isn't just some local regional conflict, it's a potential trigger for a major global crisis and surprisingly for the crypto market as well. Let us dive deep into the details, and along the way, I'll share my personal observations and ideas. As usual, I'll go into much more detail on some of these topics within our private community chat. You'll find detailed instructions on how to join the private trading chat in the video description. So what exactly is going on? In early 2026, Iran effectively blocked the Strait of Hormuz following strikes by the US and Israel. Shipping traffic collapsed almost to zero. Hundreds of tankers were stranded and oil prices skyrocketed. But something interesting is happening now. Shipping is starting to gradually recover. Over 20 ships are now passing through daily. This means only one thing: they're trying to normalize the market, but the situation remains highly unstable. Now, let's take a deeper look. The United States is executing a highly strategic maneuver, effectively blocking off key logistical routes, putting intense pressure on Iran and hitting China simultaneously. After all, China gets a huge portion of its oil specifically through this region. And if you hold strategic control over the Strait of Hormuz, you control the energy supplies flowing into Asia. The Americans are essentially playing a game of coercion. Guys, don't pass through here. And while this puts significant pressure on Iran, it also puts pressure on China, because the whole global energy logistics supply chain is completely thrown into chaos. Essentially, this is no longer just a conflict with Iran, it's a proxy war with China for control over energy flows. So what happens next? There are currently two scenarios. First, they reach an agreement. Iran partially reopens the strait and China joins the negotiations. The market stabilizes. The second is escalation. In that case, attacks on ships continue, the strait is blocked again, and oil prices skyrocket. But most importantly, everything can change in just a matter of days. Now let's examine the ways this impacts the world of crypto. And this is where it starts to get interesting. If oil prices rise, inflation rises. If inflation rises, the Fed won't cut rates. If rates stay high, crypto remains under pressure. But if distrust in the systems begins, money flows into Bitcoin as a hedge. Let's break down the scenario. In the short term, the primary downside for crypto includes rising oil prices, intense market pressure, and liquidations. Looking at the potential upside in the medium term, it is driven by geopolitical instability, fleeing fiat currencies, and the steadily growing narrative of Bitcoin as a reliable safe haven asset. And what do we come to understand, friends? The Strait of Hormuz is far more than simple geography. It's global energy, economics, politics, and crypto. And if you truly understand these complex connections, you will start to see the market several steps ahead. For now, it looks like the United States is trying to negotiate through intense pressure with both Iran and China. But it's very important to remember, this entire situation can turn in any direction very quickly, which means you absolutely need to be ready for it. If you want to see these reviews more often, subscribe. It's not just news here, it's an understanding of how the world works and how you can profit from it.